Welcome to episode 2A, I'm going to call it, of the Trader Cafe. So today we have one of the amazing members of staff for Actions to Wealth with us today. It's Lloyd. Now, for those of you that don't know what the Trader Cafe is all about, what it is a interview with me, Julian McCree. I'm interviewing Lloyd, and we're going to just talk a little bit about trading. So a bit of background and a bit about trading, and really what this is to do is to showcase really how different traders do different things. And that doesn't mean to say that they're right or wrong. This is the way that that people like to do it. And the key thing is that everybody out there can learn something from every, hopefully from every interview that we do. So before we get started, I just want to outline that there will be a prize for this week. There'll be a prize at the end. We will spin the magic wheel towards the end of the interview. And a lucky winner will have a couple of weeks on my broadcast group. So I think that's a great prize, and hopefully you can get a feel for how we do things in the broadcast group, and also I think get a feel for the way which you trade the foreign exchange market as well too, the way that I trade the foreign exchange market. So really, I guess this is sort of me trying to stop talking as soon as I can, really. So Lloyd, why don't you take it away a little bit with a quick bio of yourself, and just really introduce yourself to us, how you got started, and what the key things are for you as a trader, what sort of makes you tick.
Right. Hi everybody, my name is Lloyd, been with ATW for I think about nearly 4 years already. Yeah, so I guess the biggest difference between me and other traders is that I would say I will qualify myself as a quant trader. Yeah, it's just this week I'm beginning to read out about the difference between the systematic trader and a quant trader. I think by and large all of us are mainly a systematic trader, but specifically me, I'm dealing with quant as in data, backtesting data specifically. Yeah, so that's how I approach my trading nowadays. And to me, that suits me the most because I don't really have to think. My emotions don't really interfere with my decision-making process 99% of the time. 1% of the time, it still interferes due to some black swan event, then I have to step in. Yeah, but by and large, most of the time, I just let the system do what it does as much as I can. Yeah, I've been trading Forex for about 4 years since together with ATW, but truthfully speaking, I've only been profitable for the past 2 years. Yeah, consistently profitable, not just whipsaw kind of profits. Yeah, happy for one day, sad the other day, but consistently able to sleep in peace. I think it's only for the past 2 years that happens. I've also trade stocks, invest in stocks. I'll use the term carefully. Yeah, so I'm investing in stocks, but that part is I learned on my own. Yeah, but with AW, it's more of a systematic approach since 4 years back. Yeah, that's about it.
Okay, so when you talk about back testing, so that means that just for the people who aren't too sure what that means, could you just explain that a little bit to people about how you go about doing that?
All right, so the simple thing, let's say I learned a system from Julian you today. So I know it works for you. It fits your temperament, it fits your personality, but whether it works for me is another matter altogether. Because while the system may be profitable, how profitable it is, whether can I accept the loss rate, the win-loss ratio per se, that's another subject matter altogether. That's when I have to back test. Yeah, so look back to the past 5 years, past 10 years, and see for a single pair how it actually performs. And for multiple pairs, that means altogether the 28 pairs, what's the drawdown, the biggest drawdown altogether, and what's my consecutive losses and what's my consecutive winners. Yeah, so I have a pretty good idea most of the time within a band how the strategy will perform. Yeah, so anything that, so let's say a strategy has formed, usually gives me out of 4 consecutive losses, fine, it performs that's how it should be. But anytime it gives me out to 7 consecutive losses, that's probably I should start to look back, did I do anything wrong? Yeah, that's when I can reliably question myself, not question the strategy. I mean, there's nothing to question the strategy is dead. Yeah, but the trader is alive. Yeah, so that's how I do back testing. Of course, the most tedious part will be pair by pair price action by price action. But that also gives me the confidence to approach the strategy. And that also gives me an insight to the strategy. While the system itself is fine, but sometimes at the back of our mind, I think for really experienced traders, they have this thing called, my gut tells me this particular pair at this point of time will go for the moon. But how do I get this gut feeling? Of course, experience plays one part. The other part to me is backtesting, because backtesting, then I'll begin to see similarities begin to appear. That's where I start to actually take advantage of it. Yeah.
Okay, so thank you for that. That's look, this is quite fascinating, really. So you would probably say that one of the main reasons why you do it would be a confidence reason, because then you feel that you understand the parameters of what you're trading, right? Is that how I've interpreted that?
Yes, confidence definitely plays a big part. Definitely, yeah, you're right on the money.
Look, and I think part of this really highlights the constant challenge that traders have between the balancing act they have between physical capital and mental capital, right? So physical capital is the money we got in our account, and hopefully that grows through time. And what's also sometimes forgotten by traders as well too is that mental capital. Now, the mental capital, what I mean by that is, not to say, "Oh, we're tired today because we haven't had our shredded wheat at breakfast," but it's more to do with the fact is, are we in the right mood to do this, right? And trading can be quite a mentally taxing activity, right? And so it's really important to make sure that you're feeling confident. It's a bit like a sportsman in some respects, isn't it? It's, how can you perform at your best unless you're feeling confident about what you're doing? And some of that comes back to training. Now, when we talk about backtesting is a form of training, I think, isn't it? In terms of how the trader goes back and look at what's happened in the past. So when you scroll back a second, so what you try and do at the beginning is can you just take us through from like, okay, I have a blank sheet of paper. How do I start? What do I look at? And before I even get to the back testing point, what am I trying to find for me in terms of a trading system?
That's a bit tough, but probably I'll just use the everybody loves, I think most people who gets off with forex trading, I think the first indicator that they touch will be the oscillators. They seem to think that the oscillators are magical. Yeah. If you go overboard, then I'll go counter the trades. If you go oversold, then I'll just buy it. Yeah, so I'll start off with that. So let's say we have a simple analogy that stochastic. I mean, it's one of the popular oscillators. Yeah, so I backtest. Every time it's overbought, I will sell it. Every time it goes oversold, I'll buy it. And so let's say over a sample data of 500 trades, what do I get the results? Yeah, I'm pretty sure I will get pretty drastic losing results. But out of the sample 500 trades, then I began to pin down, hey, there are periods actually I have multiple consecutive winners. Then I will look at a particular scenario. When do these consecutive winners actually happen? Might possibly be within a range, might possibly be within a trend. Then if it's within a range, then I probably need to add another indicator to define what exactly is a range to me so that I can take advantage of the multiple winners that happen. Now that's the first part of the approach. The second part, which ties in very strongly with what you have actually just mentioned, is the mental capital. What about the losses? Yeah, so people always backtest for winners. That's fine and well. But what about backtesting for losses? Yeah, I can have a system that gives me 200% winners a year. But what if the losses were up to 50% drawdown? Then I don't think that's acceptable to any long-term traders per se. Yeah, so while I concentrate on the winners, then I have to look at what's the consecutive losses, maximum drawdown that the system gives me, and when again does it actually exactly occur? And do I need to physically eyeball? That means look at a higher time frame to differentiate. Can I filter out these losses, or do I need to add in a third indicator? Yeah. So now this, every time I add in an indicator, of course, I need to go back to the basics. Go back to start from zero again and start backtesting. Then the pitfall is that when do I stop adding indicators? I need to have a discipline for that. Yeah, I might end up with a system with 10, 11 indicators that will actually be very messy for my trading. Yeah. So actually, another thing I wish to add on is that I think 3 years back, that's the first time I saw you Julian, is that you touched on the topic of mental capital, which I have absolutely no concept of. So previously I was a stock, I invest in stocks. So being a relatively, I think I hold my stocks for 9 months to a year, I don't usually have multiple losses for stocks. So I have confidence in that area. And then, but for my stock losses, I kept thinking that, yeah, every time I lost up to $20 to $30,000, which is fine by me. I can accept that. But for Forex, so when I joined Paul, is that he gives me a 25,000 account, then I start to have multiple losses of 1%. So 25,000, 1% is only $250. Let's say 5 losses. So I lost $1,250, which is a very, very small amount compared to my stock losses, but it bothers me a lot. That's when I actually touch on mental capital need not necessarily refer to the physical money that I lost. It also can be referring to how many losses that I can actually accept for myself. That means the failure point whereby my emotion starts to break down and interfere unnecessarily. Yeah, so that's 3 years ago. That's actually a powerful concept that you brought forth to my attention, and I also during my backtesting phase, I'm also being very aware of it. Yeah. So
look, I think, yeah. Look, and thank you for supporting me on that. Look, I think it's one of the challenges that new traders have when they first start is they want to get trading right without actually getting a full understanding of what they're doing. And I can understand that. It's a bit like when you're playing any sport, you want to get out there, you want to hit a ball. If you're playing a racket sport or something, you just want to hit it, right? And then you worry about trying to get the technique a little bit later, which I think is sound to build up some enthusiasm, but that's really all it is. And I think one of the challenges you have as a trader is that often when you hit a series of losing trades, which will happen to everybody, and I'm pretty sure that the Paul Tudor Joneses and the Turtles, and I'm trying to think of some modern day traders who will also be in the same boat, will all say the same thing, is that they expect to have losing streaks at some point. It doesn't make the losing streak any easier or any easier to manage. But what you've done is you've said, well, look, I can compartmentalize this, right? Is that I can say with my back testing, and I've done some work, I'm expecting that on average, I'm going to have 3 consecutive losers, for instance, right? So if I get 3 consecutive losers, am I going to be too bothered? Is my mental capital going to be in the space that isn't, that is concerned? And the short answer is no, because the system is sort of used to that, right? You assume that then it'll come back on stream again, and you know that over the course of a certain period of time it will make money, right? We've back tested that. Unless the world changes or the market changes completely, it's going to make money. So you've got that underlying confidence about what's going on. Now you've got the tools of the trade and you're starting to really learn technique. Okay, so when you get to the point where you have 4 losing trades, you're going, well, actually, how many times has that happened before? Oh, maybe 5 losing trades. Well, that's really exceptional. And in fact, you can almost spin that on its head, and you can think about the risk profile slightly differently when you get this, if you like, 2 standard deviations or 3 standard deviations away from what your trading system normally says. You can look at it and go, well, hang on, that's abnormal. So number one, if the market hasn't changed, then I wonder what else is going on. Are my systems all rubbish now because somebody's looked at them and decided to fight them? Well, maybe, but probably not. Or secondly, is it just one of those times when the market is being particularly weird and it will mean revert really quickly? And then you say, well, if that's going to possibly mean revert, then in that case, I can expect and I can think about maybe even increasing the risk that I'm taking at that 5 or 6 losing point, because I know that it's going to come back. It should come back to the average at some point. So I should get a series of winners coming through quite soon, right? And that may be, if I've had 6 losers, I may then have 7 or 8 or 9 consecutive winners, but I want to try and take advantage of that. So I think what this does is gives you the confidence to start thinking about how you manage your trading account and not just managing the trades, because that's really what this is about. What you're saying is my end goal here I'm Lloyd, and here's my end goal. My end goal is to make sure that at the end that I have an account balance that's rising at the end of the year, right? I want it to be positive year on year, positive month on month, you know, even if you wish it to be, if you want to trade that often, positive day to day, right? But let's go with month to month, right? So in that space, what I've thought about is I've set myself a target or a goal or whatever you want to do, or a mission statement that I want to try and grow my account every month, right? And that's what I want to try and do. Now, within that process, I've got all these things happening and going on. But what I've done is I've thought about that vision to start with and then worked it back into how do I get there? Well, I get there not just from firing off trades whenever any indicator turns around and looks like it's going to be a good trade. So we don't do the looks like stuff. I look at it and say, I've got a specific point that I enter the market, a specific reason for doing it. I've tested that, and I know that that statistically is going to give me a positive outcome over the course of the month. So I just go through that process all the time, and then I gain confidence because month after month after month, by the way, it works, right? And so I think what's really important is you probably in your head, you've had to think about the difference between stock and Forex trading. And maybe you've done this inadvertently, but I think you've done it exactly the right way, which is say, well, I've got a mission here. What's my mission? And then I'll try and figure out how I get there. And part of the getting there is to make sure that you've got confidence in your methodology and you've back tested it to make sure it's right. And that then gives you the confidence to roll it forward. So what happens when you see, so do you then try and say, well, look, that's one methodology. Do you then try and build up a portfolio of methodologies, or, you know, how do you add here, or do you just try and improve what you have?
Yeah, that's actually an interesting question. So just this week, one of my favorite podcasts, Chat with Traders, they talk about one algo trader, quant trader. He actually has over 80 strategies running for him at one time. And here I am sitting on my butt thinking that I have already 4 strategies. I thought that's a lot.
I think 4 or 5 is quite a lot too. I think 8 is far out there, right? He's going to be a busy guy.
Yeah. So with regards to your question, is that nowadays I try in my spare time, I try to invent new strategy. So and then I still backtest them, but I don't actively. I have about 4 working strategies which I have completely happy with. Yeah. So it doesn't look like they're going to fail me at anytime soon. But to keep myself relevant in the market, I still need to look at the market. So to be relevant to me is that I'll still keep on backtesting strategies. And then so probably I backtest out of 10 strategies, 9 will end up in a strategy graveyard. 1 will be in the backup session. Yeah. So anytime whereby I feel that one of my active strategies is failing, I need to switch. Then I will go to my backup and see if any of it suits the replacement. Then I'll switch over to it. Yeah. So I don't really go in panic mode. One of my strategies is failing. What can I do? What should I do? And then I start some random backtesting, which has a high chance of failure. Yeah. So I still do backtest. Just I don't actively put them in trades. I might. There's some that I might, but I will probably just open a cent account and then just trade at 0.1%. That's about it. Yeah.
No, that makes sense. So you're sort of saying in all of that you're a bit of a hard taskmaster, right? In the sense that you won't just randomly go and pick up something because something else isn't working, right? So you actually want to spend a lot of time proving it. So you're hard to convince, if you like, that a new strategy's got validity for you. You want to give it quite a bit of time, right?
Mm-hmm. Yeah. Definitely, I want to give it a bit of time, because if I switch a backup strategy to my active management, to my active funds, which is in the compound of 5 to 6 digits, I don't really want to mess up with that portion.
Yeah. I understand. So, so 1, 2, 3, 4. Do you feel that the increase in strategies gives you an increase in diversification of the results, not necessarily the trades? You may end up having the same trades on, but does it give you a diversification of results?
Yes, it does give me a diversification. One of my main things for having 4 systems going on at the same time is that I can really push those systems, each of these, to give me, let's say, 10% a month. So people might think, you have 40% up month on month. I say, no, ultimately that's not true. I mean, it can be true, but it also means that my drawdown is also quite drastic. Yeah. So what I aim to have is that diversification of strategies. So one trend, one mean reversion, one breakout, and then one day trading. So that at the end of the month, what I achieve is probably 8 to 10% and a smoother equity curve. Yeah. So I'm no longer I'm no longer trading for the fun of trading. Yeah, for the excitement of it. All I want to see at the end of the day, oh, okay, 2% drawdown, 6% up. I'm happy with that. I can sleep with that results. Yeah.
It's interesting. Hey, look, we've had a couple of questions come through. So Jiva's asking, how exactly do you back test and how many years back in history do you test?
So the first step of back testing is that I'll do just pen and paper, really, and go bar by bar scrolling back. So that's how I do it. That's how I actually, but when you do it that way, then you begin to see that, oh, hey, the gut feeling, the special circumstances that when the strategy actually goes boom, you will know it. Yeah. And that's how I stay relevant in the market, because I still need to identify those. And then how many years back in history do I backtest? I think I don't go up to 10 years because I feel that the market nowadays move a bit differently from 10 years ago. So I actually backtest up to 5 years only. Yeah. So once I'm done with my pen and paper backtesting, I'll actually have to pay a programmer to put it into an actual EA and run it on the system to see. Yeah, because me being a human, even if I do pen and paper backtest, there are sometimes inevitably, I say, a 5% rate whereby I might be biased with certain inputs, like, hey, there's a 1%, sorry, 1 pip. So do I count it as a TP hit, or is there a spread differentiation so that is actually considered a winner? Yeah, so EA will be better for that. Yeah.
Okay, that's interesting. So do you then, so in terms of once you've back tested, do you like to use those as so in terms of just the operation, maybe help me out a little bit here. So when you're trading the systems, how do you do that? Is it done with a scanner that automatically informs you that something's triggered, or do you let the computer like do it all?
It's actually very similar to what Actions to Wealth, the market scanner does. Yeah. So I have let's say my trend trading system. Yeah. So with my trend trading system, actually I don't use the scanner. Yeah. So actually with that particular system, I actually every morning I still not every morning, every week I still scan it pair by pair. That's why I still do the currency strength analysis. Then when I deem that this particular pair is trending for the technical aspects of it, then I'll put an EA on. Yeah. So when this specific condition occurs, the EA will actually trigger me in. From then on, I don't look at a terminal, I don't look at my account, I'll just let the EA handle what it does. Now, the only reason why I will actually interfere with the EA is I know there's a huge news coming out. And usually there will be the USD pairs, either the FOMC announcement or rate announcement for some other pairs, that I might be shifting the stop loss just to protect my profits. But than that, usually I don't really interfere too much. Yeah, that's about it.
Okay, so just for the audience, so EA means
expert advisor.
So that's a function in MT4, I believe, where that allows you to run these automated programs.
Yeah. So think of them as just bots. I think that would be easier to understand. They help you to place trades, help you to take profits. Yeah, trigger your trades. Yeah, it can be as easy as just alerting you to trade setups. Yeah, or as what Julian has mentioned just now, if you key in certain parameters to it, then it alerts to you which pair might be fulfilling the condition for either ranging or trending or breakouts. Yeah, so scanner.
Thanks. So what's next then for Lloyd? Where do you push your trading edge from here?
So what's next for me is that I like trading my money. So I think I am in a good position to actually trade other people's money. Yeah, so I might be actually once I have gained considerable exposure. I would say build out a 6 month portfolio that says history that says that look, all my 4 performing EA is stable. They don't give me random wacko results. Then I'll probably start to look for funds. Actually on the internet, that there are companies that is willing to give out part of their funds for retail traders to trade, providing we have good results and we can control our risk. Yeah, so that's how I intend to actually expand my portfolio.
Nice. Look, I think it's also a sign of maturity and growth as well too. I think traders often go in two different directions. People can keep it as a hobby because they may have a day job and they may be looking at the markets just occasionally. And this is, when things get active. And also there's another pathway as well too, which is like the professional traders, where what you're trying to achieve is to go from just managing your own money or small amounts of your own money to try and lever that into a more institutional setting where you have a larger amount of money. And I always think that it's quite an interesting exercise because people have different mental edges, I'm going to say at this point, when you get into larger and larger amounts of money. So there's a trading institutional money where you're dealing with millions of dollars rather than hundreds of thousands of dollars is quite a big step for people. And then this gets back to this whole point about, well, I tell you what, I'm really confident in my methodology and I'm confident in my systems and I'm confident in the way I do things. All I have to do is keep on repeating it in just bigger size. Now, most of the time that sounds incredibly easy to do. And I think for the traders who are really well organized, I think it's pretty straightforward, right? I think where some people come unstuck is when they get into this thing, I just go straight to managing money without having that particular methodology nailed down or that particular thought process nailed down, right? And then you get some volatility and you're not quite sure how it's going to affect it. A track record is great, but but it's only as good as what essentially you've done. It's what you're going to do next that really matters, right? In terms of the way that things are working. Hey, look, Lloyd, thank you very much for this. This is awesome. I'm really conscious of time. I think we might have to go, if everybody's still around, and we might have to go to spinning the wheel. Do we have Angel or Maya's around to hopefully spin the wheel for us, the wheel of fortune, to see which lucky person has got a couple of weeks on the broadcast group? Here we go. I love this.
Okay. Paul.
So I'm going to say, which pool is that? Is it our pool? If it is, I'm going to go with the person next to Paul, who was Jira.
Not me, Julian. It's Paul P. Paul P's on.
Okay, Paul. Well, in that case, Paul, congratulations. And look, I think Jira, I owe you a couple of weeks as well too from last week. You've been kind enough to listen in. So look, I think as a special prize, we're going to give away two this week because I think I owed you one from last time. So congratulations, both of you, Paul and Jira. Welcome to my broadcast group. And the next 2 weeks, hopefully, we'll be trading together, and you'll see some of the things that I get up to. Look, we're got 2 or 3 minutes left to go, which means we're into rapid fire questions. Now, I have a sneaking suspicion that Lloyd may be quite an expert on this, but if you want to change some of your answers, now is your time. So okay. Here we go. Okay, so what trader has most influenced your trading and why?
I haven't got that question before, but I would go with actually Adam Grimes. I don't know. Yeah, because I have actually read his book. He influenced me a lot because he's the first person that actually publishes on his backtesting results of different indicators. So I was like, oh, cool. There's actually someone doing out there doing this thing. Then when I look at the results and look at what some misconception about indicators are, what some of the misconception about backtesting are, that's where I actually start to learn. Yeah.
Brilliant. And what was that name again?
Adam Grimes.
Okay, brilliant. Okay, folks.
I think his book is The Art and Science of Technical Analysis.
I'm writing this down, right? Brilliant, thank you. Okay, so what is one attribute that every trader should have?
One attribute, learn to lose.
Nice, like that.
Yeah.
What's your favorite indicator in trading?
Nowadays, I would say it will be the average true range, ATR indicator. Yeah, it seems to have I can accept where I should be placing my stop loss and partial take profit based on ATR. Since there are pretty good results in my backtesting.
Okay, Joe Biden, savior or caretaker?
Caretaker.
Yeah, I think I'm with you on that one too. Now, I might have asked you this before, but crystal ball time, what price will Bitcoin be in a year's time?
In the year's time, specifically in a year, I actually have $500,000 to $1 million. I think
I like it.
Yeah.
Super bullish. I'm trying to remember what Ash said. Did Ash come out and say he thought it was going to be the same as it is now, which is interesting. So we have a range. In a speed eating food contest, what food would you choose?
I would go toe to toe with you on chicken McNuggets.
Brilliant. Look, thanks, Lloyd. And that's all we've got time for this week, folks. I guess we're almost exactly running to time. So look, folks, just this will be over and out for me. And thank you very much, Lloyd, my guest this week. You've been amazing as always. And for those of you who are the TTR show starts in a few minutes. Thanks everybody for listening.